Good day, traders all over the world. Once again, welcome to our YouTube channel, right? So, I've been receiving a lot of comments or questions, right, relating what we call the breakout strategy. Firstly, let's start there, right? Breakout strategy. Remember, guys, the most important thing is we focus on NES 100, which is US Tech, also or NASDAQ, right? And secondly, we focus on SPX 500, which is also known as US 500, right? NES 100 or US Tech, okay? And thirdly, the most important thing we focus on is, or the most important pair or index, US 30, all right? Now, we only trade this strategy at the New York session, guys, which is very important. Very important. So I don't want you to miss anything. You can say it's NYSE, right? Our main focus is on the breakout. Once we have a breakout, it's either we are going to buy or we are going to sell, right? And then we only trade NASDAQ or US Tech, SPX 500 or US 500, right? And then US 30, which is very familiar. All of us know about US 30, right? And also, we only trade this strategy on New York session only. But yes, you can also trade this strategy on currency pairs also. Just look for a breakout there and then everything will be simple for you. The reason why we trade this on New York session is because once New York session starts, that's when NES 100 or NASDAQ, SPX 500 or US 30, that's when they start to move. Why? Because of this. Now, I'm going to talk about the time zone of South Africa, right? And you can also just convert the time, fundamentals, right? Now, US 30, NASDAQ, SPX 500, they have a high impact at that time of the New York session. Why? Because of fundamentals. Now, we have fundamentals on South Africa at 3:30 there. News release. That's when you have what we call the news release at 3:30. So remember, the breakout strategy or the breakout strategist or the breakout traders, we are not fundamentals. We only focus on the technical part, technical analysis. So the breakout strategy has to do with the technical analysis, not fundamentals. We don't trade news. That is why it's very important to look for a breakout or to look for entry opportunities either on the buy side or on the sell side at 4 o'clock, which is 16 p.m. this side on South Africa, right? So at 4 o'clock in the afternoon, that is when you must look for your entry opportunities or entry possibilities, or that's when you can look for breakouts, right? Reason being is because at 3:30 there is news that are taking place, meaning that at 3:30 it's only fundamentals that are trading. So as technical traders, we just have to wait for fundamentals or for news to take place. Now remember, these news are the ones that has a high impact in the movement at 3:30 or on New York session. It's either once the news are released, either the buyers are going to regain strength or the sellers are going to regain strength, or either way there will be what we call a consolidation, right? So at 3:30, if the buyers are very strong or they regain strength until they break out on the resistance level, we know we are going to buy, right? Because there is a high impact of buyers at that time. And then if there is a high impact of sellers that are going to break the support level, we know we're going to sell. Why? Because there is a high impact of sellers at that time, right? Or at that session, meaning that the New York session. Okay? So, yeah, very important. 3:30 is the time when we just watch the market. You don't trade at that time. We don't look for breakouts at that time. You look for breakouts at 4 o'clock South African time. So you can just convert. I think on the USA, a news release around 9:30 a.m. 9:30 a.m. if I'm not mistaken. That's when New York session starts. I think so. Right? So yeah, you can just convert the time there. So our entry levels, we consider them at 4 o'clock on South African time, right? 4 o'clock afternoon. That's when we look for entry opportunities, right? Thank you for that understanding. So I'm going to make this very simple and very easy, because I remember on the previous video I received a lot of questions and a lot of comments, and also I just want to thank those who've been supporting us, those comments, those questions. We really appreciate them. Right now, let's get to work. Remember, this is the time, 16 o'clock. That is when we open the trade. That is when we look into the chart. Right at 4 o'clock in the afternoon on South African time. Let me also make sure that it makes sense. South African time at 4 o'clock in the afternoon. That is when we will look for breakout, right? So the most important thing, first things first, you go to 15-minute time frame, right? The main thing about 15-minute time frame, that's when we look for lower lows and higher highs, right, of that session. Okay, so let's make an example. We have the market, or you open your laptop or even your smartphone, right? And then this is what you see. Let me just do this very quickly, right? Just want to make this thing very clear and understandable. This strategy is very simple. Everyone can use this strategy. And one thing about this strategy, it's very consistent. Right? Let's say now you open the chart. Let's say you open your chart and then at 4 o'clock South African time, remember, this is what you see. Right? This is what you see. So the most important thing is, remember, at 4 o'clock when you are looking for a breakout, you have to identify the lowest candle of the day and the highest candle of the day, or the lowest candle of the New York session and the highest candle of the New York session, right? Remember, we are only trading the New York session. We are only trading the New York session. So looking at this graph, or looking at my chart or my movement, is if this is the lowest candle of that New York session or of that hour, meaning that I'm going to draw my line, my first line down there, right? And then if this is my second highest candle, I'm going to draw my second line up there. Okay, so I'm using different colors just to show you that these levels are not the same, right? Remember, we are still on 15-minute time frame. 15-minute time frame. That is when we look for the lowest candle and the highest candle, right? So the lowest candle will be our support level. Remember, we are day traders, so we analyze this each and every day. Every day you have to do this, right? This is the support level, right? And then above there we have what we call the resistance level. Remember, the basic says once the market is at the resistance level and doesn't break above the resistance level, it simply means the market is going to sell, or we are going to sell, or we are going to look for sales, right? And when the market comes to the support level, if the market doesn't break the level of support, we are going to do what? We are going to buy. But simultaneously, there will be changes. Once this level is broken, then we are going to sell. We no longer buy. Why? Because the support level automatically changes into a what? Into our new resistance level. Once the support level is broken, it changes to the resistance level. Basics, right? And then also here, same thing applies. If the resistance level gets broken, if our 1 hour candle closes above the resistance level, and we assume that the market is going to buy, now automatically we no longer sell but we buy. Why? Because now the resistance level will automatically change into our new support level. So I was just highlighting that. Those are the basics. The basics are very important. Always note that in forex trading we trade the basics. The basics are very important, right? They play a huge role into the market. So if you don't know the basics, you have to get a mentor, or you have to look for books online in order for you to learn about the basics, right? So let me give you just 2 minutes to go through what you just said. Remember, if the resistance level gets broken, it automatically changes into our new support level. If the support level gets broken, it automatically changes into our new resistance level. And also, the support level, we call it what we call the demand zone. This is where the buyers are, the demand zone, right? And then the resistance level, we call it the what? The supply zone. You are the supplier. Meaning, as a supplier, you know what you do, you sell, right? But once things are on demand, meaning that once things become popular or things are trending, people want to buy them, right? So you do what? You buy, right? And then here, this is where the bullish part comes in. This is where buyers are, meaning that the market is going to go bullish. Remember, buy is for bullish movement, right? And then sell is for a bearish movement. Okay, this is where we expect the market to do what? To sell. And then here we expect the market to do what? To buy. Right? And then at this level, it is the level where the market is overbought. Overbought meaning that now there's too much bias at that level, right? And then here the market is oversold. The market is oversold. So I will give you just 2 minutes to write this thing down. Remember, the resistance level, that is where the market is overbought. The support level, we can also call it, the support level, that is where the market is oversold, right? The resistance level is also called the supply zone. And then that is where the bearish movement is expected at the resistance zone. And then that is where we expect the sellers to be at, or that is where the sellers are at. And one thing about the support level is it's a demand zone, right? We are demanding. That's when we need to buy. You know, when you demand something, you want to buy it, right? Or when you demand a product in simple ways or business ways, right? In order for us, because this is a business. Remember, forex is a business, so we need to talk business, right? So the demand zone is when a product is maybe selling, or when a product is being overbought, or when a product is being trending or popular, or people want to buy that thing, right? So that is a demand zone. And then we expect the market to be bullish. Why? Because the buyers are there. We expect the market to go up, and then the market day is oversold, right? Okay, let me just give you 2 minutes to note that thing down, because these are the basics. The basics are very important, right? Always know that the basics are very important. Right, I hope you got that and you wrote it down, right? Now let me remove these things now. Let me remove, those are the basics. So I was just giving you or reminding you of what the basic says, which is very important. This is the resistance level. The resistance level, right? The resistance level. This is the support level. So guys, the most important thing is you are on a 15-minute time frame, right? Exactly. Let's say you are trading Nasdaq. This is Nasdaq or SPX 500 or US30, right? Now, the most important thing on 15-minute time frame, we just look for the support level and the resistance level only. That's what you do on 15-minute time frame, right? Now, after you're done with this, you switch to 1 hour time frame. Remember, it's at 4 o'clock, right? You switch to 1 hour time frame. So the main thing about, we look for this at 4 o'clock, right? So the most important thing about this is, or the most important thing about the breakout at New York session is, we don't know if there will be a breakout at 4 o'clock, right? Sometimes there can be a breakout at 5 o'clock in the afternoon, 6 o'clock, right? We don't assume that at 4 o'clock there will be a breakout, but we must wait until there is a confirmed breakout so that we can predict the direction of the movement. Remember, one thing about the breakout is we predict the direction of the movement. That's when we look for the direction of the movement, right? Definitely. So after you've done with this on a 15-minute time frame, now you switch to 1 hour time frame. So the most important thing about 1 hour time frame is that is where we look for what? Breakouts. Okay? So on a 1 hour time frame is this, right? Let me remove these things. Remember, this is still the resistance, the support, right? You switch to 1 hour time frame. So on 1 hour time frame, the scenario is this. If the market breaks above, if 1 hour candle breaks above what we call the resistance level, right? That is where we expected to do what? To buy. Why? Because automatically the resistance level is no longer the resistance level, but now we have a new level called the support level. So remember, at the support level we do what? We buy, right? So same thing applies. Now the resistance level is broken because 1 hour candle closed above the level of resistance, meaning that the level of resistance is now broken. That is when we are expected to do what? To buy. See how simple this thing can be. You just have to wait for just 1 hour candle, just 1 hour candle to break above the resistance level so that you can assume that the market is going to buy. Okay? Now, same thing applies. Same thing applies. Same thing applies. If now the market tests the resistance level, right? If the market tests the resistance level there, but fails to break above, if the market fails to break above, now the market is gonna go on to a downtrend. Now, this scenario tells us that the resistance level here is very powerful, or the resistance is very strong. The sellers there, they are very strong, right? And also the resistance level is holding the buyers there. Now, if the market continuously moves into a downside, this is another scenario, right? And then find out that 1 hour candle breaks below your support level. Remember, this is the support level, right? So about the support level, if 1 hour candle breaks below, if this level of support gets broken by only 1 hour candle, right, of sellers, that means that is where we expect to do what? To sell. Why? Because automatically now the support level is broken, and once the support level is broken, it changes into our new resistance level. So it's very important to note this thing down. Okay, so this is the most important. On 1 hour time frame, if you have your two levels, is now you just have to wait for a breakout. So if the support level gets broken with only 1 hour candle, then you can expect a sell there. Why? Because now the support level is broken, and once it's broken, it automatically changes into our new resistance level, right? And again, the most important thing is it's either you can trade the breakout or the pullback or the retracement. Now, what are we talking about now? What are we saying? This is what we are talking about. This is what we are talking about. There is two types of traders. There is a trader that will trade the breakout, and there's a trader that will trade the pullback. Right? Now, the pullback is the market will break below, right? But you don't enter. You will wait for what? For a pullback there to test that level now, that is now the resistance level. So if the market again goes into your direction, that's when you can have a what? An entry of a sell. So there are traders who will wait for a pullback. This is also 100% accurate. Wait for a pullback first and then have your smart entries there. This one we call them the smart entries after the pullback, right? Because why? Now the level of resistance is tested twice. Remember, in order to confirm if the support or the resistance is very strong, that level must be tested twice or 3 times. Then we know that level is very strong. It must not be broken, right? And also here, the resistance level now is not broken. Now it is tested for the first time. It was tested here. It broke below The second time it was tested, broke below. Simply means that the resistance level is very strong. Then we can assume that the market is going to sell. Right? Very nice. Very nice. Very, very nice. Very nice and simple. But you have to be consistent when it comes to this. Right? Now let's come to the buy side. Now we just buy side is once the 1 hour candle breaks above, or the movement of 1 hour moves, or the market breaks above, you can wait for a pullback or a retracement, right? And then once the market moves into that direction, then now you can buy. Okay, we call them trading the pullbacks or the retracement. I think on another video I will go through this of how powerful the pullbacks can be. Why? Now, because remember, now this level is broken, right? It is our new support level. The resistance level is broken, it's our new support level. Reason why we predict or we know that there will be a high impact of buyers after the pullback is the market tested now the resistance level for the first time. It broke above, which became our new support level, right? And then the market moved upside there. The market came again for the second time to test how strong is this support level, because now it's a new support level or it's a new level, so the market must test it. If the market tests it for the second time and doesn't break below, simply means we have a strong holding support level. If the market moves into your direction, then we can predict that the market is going to buy. Why? Because we have two tested levels that are very strong and that are holding. I hope you got that. I hope you got that. So the most important thing, analyze on 15-minute time frame. Find the lowest candle, which will be your support. Find the highest candle, which will be your resistance. And now switch to 1 hour time frame to wait for a breakout. Okay? Now let me just give you again the basics. The basics. Every strategy has basics. Everything in the market, every direction, every movement is the basics, right? Now look at this. This is what we are saying, right? This is what the resistance, the support. Remember, once the market is consolidating, if it breaks above, right, this level changes to our new support level. Why? Because the resistance is broken. And then if the market comes to test the support level now and moves above, we know we are going to have a what? A bullish movement. Bullish movement. I hope this thing makes sense. Bullish movement. Secondly, if you have this scenario, we call it a consolidation or a channel. The market breaks below, test that level again of resistance. This is our new what? Resistance level. We know once we see this, we're gonna have a what we call a bearish movement, right? Now, once you see touches at the same level, meaning that if you have touches at the support and the resistance and there's no breakout, it simply means the market was doing what? The market was consolidating, which we call it the consolidation phase or the consolidation state. Also here we have a consolidation state or a consolidation phase. Consolidation. When the market is consolidating, it simply means there's no breakout. It simply means the buyers and the sellers are at the same price. They have the same power or the same impact. Simply means there's no one who is stronger than which one. There's no one who is weaker than which one, right? The buyers, we find out the buyers and the sellers are very strong, or the buyers and the sellers are very weak. Both of them have the same power or the same pressure, right? But once we have a breakout, it simply means now the buyers, if we have the breakout at the resistance, it simply means now the buyers have regained strength. Now they are taking over the market. But if we have a breakout on the support level, simply means now the sellers are very strong. Now they are taking over the market, right? We can call this a consolidation or a channel. A channel, right? Also, this one can call it a channel. Now, we don't worry about what's happening inside the channel as breakout strategies or scalper or scalping, right? This is also part of scalping strategy, right? We are scalpers, we only enter the breakout, right? We don't care what's happening inside this. We don't care what's happening inside this. We don't care what's happening inside the channel. We don't trade what's happening inside the channel. What we are looking for is a breakout. Then we can trade the direction. Okay? Now I'm giving you everything now. Now, here comes the best part also. Please don't miss this. Please don't miss this. Right? Firstly, we have what we call the supporting structures on a strategy. Every strategy has a supporting structure. Okay? What do we mean by that? We mean that there are things that we confirm first that the market is really going to buy or the market is going to sell. There are structures or supporting structures that confirms with our idea or with our prediction. We don't just predict that the market is going to buy, or we don't just predict that the market is going to sell without these confirmations, right? What we look for again is a double top, right? A double top, remember, a double top is an M formation that is like this. That is where the market is expected to sell. Okay? Secondly, we have what we call a double bottom. Double bottom, that is where we expect the market to buy. Right? The market must go bullish. Okay? Right. Double top, we sell. Double bottom, we buy. Right? Let me just give you 2 minutes to write those things down while I'm getting the light here. Let me get the light. Right. Yeah, we can work without the light. Right? So, the double top is an M. It's a formation of an M. We call them patterns. You know, in the market, we have patterns. You have double top, you have double bottom, you have head and shoulders, you have inverse head and shoulder. There are so many, right? We also have the triple top, triple bottom. So there are so many patterns in the market. So these patterns are the ones that change the direction of the market. These patterns are the ones that gives us a clear direction where the market is going, whether the market is going to buy or whether the market is going to sell. That is why they are very important, right? So remember, the double top, it takes place at the what? At the resistance level. Why? Because we sell there, resistance level, right? The double bottom, it takes place mostly at the support level. Okay? When you see a double top, we expect the market to sell, right? When you see a double bottom, we expect the market to buy, right? Some call the double top the mullahs, and then some call the double bottom the wheelies, right? We sell there, we buy there. And the double top simply means the market is overbought. And the double bottom, the market is oversold. Okay? The most important things about these patterns is they take place mostly on a 15-minute time frame. 15-minute time frame, you can find that they take place each and every day on a 15-minute time frame, right? Let me write it. 15-minute time frame, they take place each and every day, right? Also, if you see the double top on a 1 hour to 4 hour time frame, it simply means now the market is going to have a high impact or a high pressure. If you see the double top on a 1 hour, the market will move quite more pips than on a 15-minute time frame. Why? Because the higher the time frame, the more pips we get, right? The higher the time frame, more profit. Higher time frame, more movement. Simple as that. So on 1 hour and 4 hour, the double tops and the double bottoms, you can make a lot of pips, right? Rather than on a 15-minute time frame. but on a 15-minute time frame, they take place each and every day. Okay? Now, how do we use this supporting structure to our favor? This is what we do. Remember, we are on a 15-minute time frame, right? Once you find your highest level, which is the resistance. Now, let's say we want to sell Nasdaq. What is it that you must look for if you want to sell Nasdaq, right? Sell Nasdaq. Yeah, we can make an example with Nasdaq. Nasdaq US30 SPX 500, right? Now, this is the support level, right? Support level and the resistance level. How will we know if the market is really going to sell? This is what we should get, right? Let's say the market has been moving, right? The market has been moving. You know, the market moves in a wave like a zigzag, right? What we must look for is you must at least have a double top there, double top confirmation on a 15-minute time frame, double top at the resistance level. There must be at least a double top at the resistance level, right? After a double top, this is what you do. After a double top now, what do we wait for? Because yes, you can have an entry in the double top, right? But as breakout traders or breakout strategy says, we must wait until now the market breaks below the support level. That's when we can sell. Reason why we are sure that the market is going to sell is because we already have a confirmation of a double top on a 15-minute time frame. Also on 1 hour, they are very accurate, right? And also on 4 hour. But the main thing is on 15-minute time frame, they will take place each and every day. Okay, so you must look for them on a 15-minute time frame. Now, secondly, let's look at the double bottom now. So, in order for us to confirm that this market is going to sell, we must wait for a breakout at the support level. Then we can expect the market is going to sell. Right? Nice. 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 Now, that's the scenario of selling. Now, let's look for buying. Right? Let's look for buying. Now, in order for us to confirm that Nasdaq is going to buy, what is it that we look for? Here are the things, or here are the points that will give us or the confirmation that will support our direction or our prediction. Right? Now you have your resistance level there. Right? This is the resistance level. And then down there, you have what we call the support level. Okay? Now, let's say now this is the market moving on a zigzag, right? And then the market comes, and then what you must look for is a double bottom on a 15-minute time frame. You must look for a double bottom on Nasdaq, US30 or SPX 500, right? At least there must be a double bottom to confirm that the market is going to buy. Okay? Look for a double bottom on a 15-minute time frame. Now, in order for us, yes, you can enter there above the double bottom, or you can enter above the neckline. Remember, on a double top and a double bottom, we have what we call a neckline. Okay? Yes, you can enter above the neckline and hold your trade. But as breakout strategies, we have to wait until the market reaches this level of resistance level. And if the market breaks above, then that's when we can have our buy entry. Reason being is because we have to wait for the market to break the resistance level. Then we know that the market is going to buy. Now, reason why we will be confident, reason why we will have confidence that the market is going to buy is we had a double bottom down there, confirming that sooner or later the market is going to buy. So now we just have to wait for the market to break above the resistance, then we can buy from there. So you see how simple it is. You just play around with these things. If you see a double top, you know the market is going to sell, but you have to wait for the market to break below the support level, right, in order to have confidence that the market is going to buy. Now also, when it comes to this buying side, reason why or how will you confirm that the market is going to buy or Nasdaq is going to buy is when you see a double bottom there, and then you just have to wait for a breakout. Remember, there is also what we use, especially when talking about the confirmations, a rejection candle, right? Rejection candles is they mostly take place there at your support level. So the rejection candle must be down there at the support level, right? Confirming that sooner or later the market is going to do what to buy. And then if you have a rejection candle at the resistance level, it simply means the market is going to sell. So one thing about rejection candles is if the market was going on an upside, right, and then all of a sudden you have that rejection candle there. It's a small body with a long wick, right? If you have a rejection candle there, simply means the market is going to sell, right? If the market was going down and then you receive a rejection candle down there, it simply means the market is going to buy. So rejection candles, there are traders who only trade the rejection candle. Rejection candles are the ones that change the direction of the market. If the market was buying, you receive a rejection candle, simply means now the buyers are being rejected. Once you receive a rejection candle at the resistance level, simply means the buyers are being rejected, the market is going to sell. If you receive the resistance, the rejection candle at the support level, it simply means the sellers are being rejected. Now the market is going to buy. So yes guys, that's how simple the strategy can be. Make sure that you follow up on this, and I will be very grateful if you comment or you give feedback. I know some of the guys, the strategies have been working for them. Traders all over the world, they've been commenting that the strategies have been awesome to them. People have been making profit. So we would like for clear confirmations if the market or the strategy is working on your favor. Make sure you comment and we can get through it. Thank you very much for watching this video, and on the next video now we're going to talk about how to trade the channels, the breakout strategy using the channels, the uptrend and the downtrend. Thank you very much.